As September draws to a close, investors are holding their breath, hoping to end the month on a high note. But there's a storm brewing on the horizon. Could a looming U.S. government shutdown derail the market's momentum just as it's hitting record highs? Here's the full story, and trust me, it's more complex than it seems. On the trading floor, stock futures are barely budging as Wall Street tries to build on Monday's gains, capping off what's been an unusually strong September. But here's where it gets controversial. Despite the optimism, the threat of a government shutdown this week has investors on edge. Futures tied to the Dow Jones Industrial Average dipped by a mere 3 points, 0.01%, while S&P 500 and NASDAQ 100 futures slicked 0.02% and 0.03% respectively. These tiny moves belie the underlying tension. Monday's market rally was fueled by a rebound in artificial intelligence-related stocks, which had taken a hit last week due to concerns about the circular nature of AI deals and potential roadblocks like rising debt and energy constraints. Yet, some investors remain bullish, betting that strong earnings from tech giants like the Magnificent Seven and key chipmakers will keep the market soaring. But this is the part most people miss. The government shutdown threat could be a game changer. While shutdowns typically don't rattle markets, this time feels different. Investors are already jittery about a slowing labor market, stagflation risks, and lofty stock valuations. Add a shutdown to the mix, and you've got a recipe for uncertainty. Rating agencies might even revisit the U.S. credit rating, which Moody's already downgraded in May. Vice President J.D. Vance bluntly stated, "I think we're headed to a shutdown because the Democrats won't do the right thing." And here's another wrinkle. The Labor Department announced that Friday's highly anticipated non-farm payrolls report won't be released if the government shuts down. This report is critical for gauging the economy's direction ahead of the Federal Reserve's October policy meeting. President Donald Trump's weekend threat of mass firings of federal workers in the event of a shutdown only adds to the anxiety. Jack Janasowicz, lead portfolio strategist at Natixis Investment Managers, warns of tangential effects on market sentiment and volatility. Any delay in economic data due to a shutdown could amplify uncertainty, he explains. And with uncertainty comes volatility. But could this uncertainty dent the economy and risk assets? Janasewicz thinks it's unlikely to have a lasting impact unless the shutdown drags on. Despite these risks, major U.S. stock indexes are still flirting with record highs. The S&P 500 is up over 3% this month. The Dow has gained 1.7%, and the tech-heavy NASDAQ composite has surged nearly 5.3%. As the third quarter comes to a close, the S&P 500 is up 7.4%. The NASDAQ is poised for an 11% gain, and the Dow is on track for its fifth consecutive positive quarter. Looking ahead, BMO's Brian Belsky is optimistic, predicting the S&P 500 will continue climbing next year. He believes tightening interest rates and robust earnings growth will keep the market humming. Belsky even raised his year-end S&P 500 forecast to 7,000, calling 2025 the setup for a Goldilocks scenario in 2026 and 2027. But he's not ignoring the risks. Inflation could flare up if the Fed cuts rates too quickly. Now let's shift to after-hours trading, where the action is heating up. Vail Resorts saw its shares drop 2% after reporting a larger-than-expected quarterly loss. Firefly Aerospace plunged 12% after a rocket booster explosion at its Texas facility. On the flip side, Progress Software jumped 3% on strong earnings and raised guidance, while Jefferies Financial Group slipped 1.3% despite beating earnings expectations. So here's the big question. Can the market's momentum withstand a government shutdown, or are we on the brink of a correction? What do you think? Is the optimism justified, or are investors underestimating the risks? Let's debate in the comments.